Good afternoon, everyone, and thank you for joining us. We'll be starting in about 1 minute. Good afternoon and welcome to today's webinar, Understanding the CARES Act and Forward Business Planning. This webinar is produced by NCBA CLUSA featuring Castle Wealth Advisors. This webinar will cover some of the latest provisions for the different government loan programs pertaining to the CARES Act. They will also discuss additional planning ideas that all business owners should be thinking about for their companies for the remainder of 2020. Before we begin, just a bit of housekeeping. Participant phone lines will be muted during this presentation to reduce background noise. There will be a chance to pose a question, just not verbally. If you have a question, please type it into the question box in the GoToWebinar control panel on your screen. Questions will be collected and answered as time allows toward the end of the program. NCBA CLUSA will be recording this program and it will be archived on our website. You'll receive an email containing a link to the posted recording in a few days. With that said, I'll turn the webinar over to our moderator, NCBA CLUSA President and CEO, Doug O'Brien. Doug.
Hello, everyone. It's good to be with you. Thanks for being and taking the time to be with us today at the National Cooperative Business Association, CLUSA. Before jumping into this really important and I think compelling program today, I do just want to take one moment to again recognize and thank everyone in the cooperative community who's on the front lines, whether that's in agriculture and food co-ops, at the credit unions, at the rural electrics, and healthcare, and indeed, well beyond that, all of those who are making sure that all of us in the United States have the opportunity to continue to access essential goods and services. So thank you to all those. And I want to thank Castle Wealth Advisors and Gary Pittsford for joining us today. We've been holding a series of webinars over this past month to help the cooperative community understand and access the new programs that have been created by Congress to deal with some of the economic implications of the COVID pandemic. Gary and his team have had a lot of experience, have been talking to a lot of folks in these last weeks, and they're going to be able to share with us some of their insights about the CARES Act, but also about other financial considerations that co-ops and small businesses can and should take into consideration during this economic challenging time. So we're looking forward to that. I do want to mention just two things, kind of housekeeping. First, the NCBA CLUSA for now just about a month. We have a website, a COVID-19 resource web page that has a number of webinars, fact sheets, Q&As, and other really helpful advice for the cooperative community. Please check that out, ncbaclusa.coop. It's very prominent, just a click away there. The second thing I'll mention in terms of housekeeping is if you have questions during today's webinar, please add those to the chat box. At the end of the presentations, we'll be able to go through and hopefully get through most of those questions. And I'll be, my team here at NCBA CLUSA will be going through those and curate those, and we'll get to ask Castle Wealth about this. So those are the two things. I want to jump right into the content today. Again, thank you for joining us at NCBA CLUSA, where we're really working doubly hard every day to make sure that co-ops have the tools to survive this moment in this pandemic. We do hope everybody is safe and healthy. Before we go to Castle Wealth Advisors, I do want to go to Kate LaTour, who is our Director of Government Relations here at NCBA CLUSA and has been working with congressional offices and administration to make sure that co-ops have access and are eligible for these new federal programs. And Kate can give us just a quick update on the kind of the lay of the land policy-wise, and then we'll move to the folks at Castle Wealth. So, Kate, please take it away.
Sure. Hi, everyone. Thank you so much for being with us today. So just a brief update from me. Last week, as most of you know, Congress passed and the President signed into law a supplemental appropriations bill that provided additional funding for hospitals, testing, and then the two really major small business relief programs. The bill provided $10 billion for the economic injury disaster grants, and that is the quick advance of up to $10,000 that businesses can apply for directly through the Small Business Administration, as well as $50 billion for the Economic Injury Disaster Loan Program. And those applications are also submitted directly through the Small Business Administration and are direct loans from the Department of Treasury. New applications for those programs are not being accepted at this time, since the agency is still working through the queue that had accumulated before funds ran out initially. But we will definitely be letting folks know if those applications reopen. And then the legislation from last week also provided $370 billion for the Paycheck Protection Program, which I know Gary and the folks at Castle will delve into more deeply. But importantly, this funding includes set-asides for small credit unions, CDFIs, and smaller community banks, as well as the larger and regional banks as well. So it's also just important to note that the SBA and Treasury are tweaking this program on a near daily basis. For example, yesterday for 8 hours, only lending institutions with under $1 billion in assets were able to process PPP loans. So again, we'll be keeping our members posted on our resources page with any information that will be helpful to navigate the process. And then looking ahead, Congress has indicated that there will be additional legislation to continue to support both emergency relief efforts and START efforts to help both small businesses and communities kind of recover and rebuild. So we are actively working at NCBA CLUSA to continue our advocacy, making sure that co-ops are an integral part of these legislative efforts. And we will definitely be keeping folks apprised as well on how this legislation will, upcoming legislation will impact co-ops. So with that, I will turn it back over to Doug, and then we'll look forward to any questions towards the end.
Thank you, Kate, and thanks for all your work on behalf of co-ops. About to hand it over to Gary Pittsford with Castle Wealth Advisors. I do want to mention that this webinar might have a slightly different flavor than some of our others, that we're so focused on co-ops specifically. This webinar, certainly, as we've already shared, we've got information for the cooperative community. I think a lot of the information today, though, will also be very relevant to the small businesses who are part of co-ops. Many times that's going to be in a purchasing co-op. So a lot of this information, is for that small business, whether it's a sole proprietorship, an LLC, et cetera, that are part of co-ops. And, of course, a lot of this information kind of goes across these different types. So we're looking forward to Castle Wealth, to their presentations. And again, we will have question and answer at the end of the presentations. If you have any questions, add them to the chat box and we'll curate and address as many as we can in a little bit. So I'm going to hand this off to Gary. And as I do that, I'll just mention that Castle Wealth has been an associate member of NCBA CLUSA for years and such a valued partner in the work that we do on behalf of cooperatives. So Gary and Castle Wealth team, please take it away.
You're unmuted.
There you go. We can hear you.
I can hear you. Thank you, Doug. It's good to be with all of you again. What we want to try and cover in the next 30 to 40 minutes is ideas for business owners that belong to a lot of the co-ops or dealer organizations that in the industries that we work with every year. I know that a lot of people from HDA Truck Pride have tuned in, Nemion, Sphere One, Independent Welding Distributors, True Value. There may be some CCA Global Carpet One people listening. So some of you, like in the hardware industry, have been open and working hard. Some of the grocery, infra and other grocery businesses are also open and working hard. And then some of the other people that we work with have been shut down for 5-6 weeks. So there's different people that have different objectives listening in. So we'll try and touch upon a lot of ideas. With me today is, you can see on the screen there is Catherine Hoffman, our attorney that helps with analyzing documents. Mike Kelscher is going to cover some of the investment ideas. John Wheeler, who helps with all the valuations and will protect us from making any tax mistakes. But John, let's dig into it. Let's cover some ideas for the business owners. In the first 2 or 3 slides while you're watching, these are ideas for the businesses. So as Doug said, you may have an S Corp, you may have an LLC, you may have a C Corp, you may be a sole proprietor. So all of you that are running companies that have anywhere from 1 to 500 employees, a lot of these ideas will be for your businesses. Hopefully most of you in the last month already know most of this first slide. In order to take advantage of any of the changes in the CARES Act and any of the loans available, you need to work with your accountant very closely and figure out what your payroll is, what's your average payroll, and then apply for the payroll protection program. The second idea that's the most important person probably is the bank loan officer. And as Katie mentioned a minute ago, talking with small community banks that have a close relationship with the SBA is probably the most important. The big banks help some, but the small banks are probably doing most of these loans. Third, guys, if you're not sure exactly which way to jump, call us. In the industries that we specialize in, we're glad to help anybody that has a question. Fourth, in your community, if you're trying to figure out what to do and you don't have an accountant or maybe a banker to talk to, you can talk to the local Chamber of Commerce, the National Federation of Independent Businesses. There's another group called the SCORE Association, which are mostly retired business owners. Those people can try and give you some ideas. And then last, if you're desperate for someone to talk to, call the SBA office in your city or in your state. If you're in a small community, call the local field office and talk to the SBA people. But the 2 most important people that you need to talk to on getting the loans is your accountant and your loan officer. Those are really important people, and hopefully most of you listening have already done that. John, what's next? Now this is, I was talking about the payroll protection program. They call it PPP, and it talks about, you've already filled out the forms, I hope. You take your average payroll times 2.5, but you have to limit everybody's salary to no more than 100,000. And that salary includes taxes and group insurance and 401k payments, which comes under the word payroll, means all those items. But you can use the money that you borrow from payroll protection from the SBA for payroll, group health, salaries, paying your rent, mortgage interest, and utilities. The most important thing to remember is that you have to use at least 75% of the money that you get on payroll, on your people. The whole idea is to keep your people working. The other 25% or less can be used for mortgage interest or rent or utilities. So your accountant will help you make sure that you document exactly how much you're using for payroll. Your local banker will have a form to fill out probably where you verify how much money you need. John, what's next? And John Wheeler here is going to jump in and talk about deferring some taxes. You and your accountant need to figure out, what do I got to pay in July and what can I put off until 2021 or 2022? John, you want to touch on that?
Yeah, this slide is specific to one of, and again, there's a few different programs here, but there's one of 3 things that I wanted to touch on. This is probably the easiest to understand and one of the most if implementable was a word, I'd use that word. It's real simple. It's just the Social Security tax that you otherwise would have had to pay, that 6.2%. You have to keep accumulating that. You can't just stop paying it, but you can defer it. That which would have been between March 27th of 2020 all the way through December 31st of 2020, whatever you would have accumulated, you can continue to accumulate and then ratably pay off those taxes in 2021, at least by December 31st, 2021 and 2022. The idea behind this obviously is you're not totally reducing your taxes, you're just getting a deferral, which is preserving cash for you right now. The other two that I just want to touch on are based on an earlier, before the CARES Act, another act that was passed by Congress that gives you the ability to get a tax credit for, which can be applied to your, again, Social Security taxes. And it's equivalent to $511 a day for a sick employee or $200 a day for employees caring for the sick, and meaning that starting April 1st of this year, if you were making payments to employees who were sick, so this is sick pay, or to employees that were caring for somebody, and sick meaning specifically COVID, you can start accumulating these credits based on their pay. It's a maximum of 2 weeks, 80 hours. And if you want, as opposed to waiting to take that credit later on down the line, you can file what's called a Form 7200 and immediately get that credit paid back to you as in a check. Again, that's only for employees that are sick from the COVID or are taking care of people that are sick. And the payroll that's associated with this, including the deferral that I just spoke about, cannot be commingled with the salaries that are being paid using the PPP program that Gary just mentioned. The second one is an employee retention credit, which isn't quite as generous, but can still add up for quite a bit. It's if your business was essentially shut down or were at least had reduced their your relative amount of sales or income by about 50%, you can apply for a credit on qualifying wages up to $10,000 per person and a 50% interest of that. So 50% of the 10,000 means that $5,000 credit each quarter, every quarter starting after April 1st for salary that you're paying those employees. Again, you could get an immediate check back from the IRS by filing a Form 7200. And again, that what you're applying for cannot be commingled with PPP or other programs of the IRS and Congress have kind of made available to us. So that is a lot of information. And for those of you that are unfamiliar with this or are looking for some very specific examples, we all have our contact information, including our email addresses in this presentation. We would be more than happy to field a specific question, knowing that ultimately your accountant needs to be the one to actually file those returns and make the call on how to apply.
Yeah, that's a lot to cover.
It's a lot.
What it boils down to is that there's a lot of tax benefits that you and your accountant can accumulate, and every dollar in tax credit is going to save you $1. So you want to take advantage of the CARES Act. Loosened up a lot of benefits for all of us business owners, and I want you to be able to take advantage of every single one of them. John, somebody wasn't muted, but maybe they are now. Can you go to the next slide? Thank you. This is something that may be important to a lot of you. If you've been shut down for 4, 5, 6 weeks, in 2020, if you think you're going to have a loss in your business, if your S Corp or C Corp or LLC is going to show a loss rather than making a big profit like you thought you were going to make in January, if you're going to have a loss, work with your accountants and make it a big loss. Throw everything in there you can think of to make the loss, because a loss this year, a net operating loss, NOL, you can take that loss, make that number as big as you can, working with your accounting firm, and then you can go back and pick up the taxes that you paid in 2018 and 19. So that's another way to get more money back into the business. All these ideas that we're talking about, we're trying to figure out ways to accumulate more cash and give you more operating capital for the next 6 to 12 months. And we're going to talk about that a little bit later. But if you're going to have a loss, take advantage of it, because the CARES Act loosened up the rules, and you can take a bigger loss now and take advantage of going back and getting the taxes that you paid the last few years. So work with your accountant. Tell your accountant that if you're going to have an NOL, make it a good one and go back and get those taxes. That's another way to get more cash. John, what's next? These are just some budgeting ideas. What I'm concerned about with a lot of the people that we've worked with all across the country, we work with clients in all 50 states, and we hear all kinds of stories. But the government programs basically tried to get everybody that was shut down from February through March, April, May. The programs like the PPP goes until June 30th, but how do we get from June 30th to December 31st? How are we going to get through the next 6 months? And this is what you all got to be thinking about for those of you that have been shut down. What's my company going to look like for the next 6 months and going into next year? So let me go through these quickly. Cash, cash, cash. Okay, so we're talking about accumulating. What's your current cash? A lot of us have had automatic withdrawals coming out of our checking account, automatic payments authorized through the bank. Go back through those automatic payments and see if some of them could be stopped, and then you go back to writing checks whenever you think you can afford it or whenever the right time is, but not necessarily have all automatic payments. Control the cash flow. Number 3, estimate your business revenues. Will you have reduced operating hours, reduced people coming in? Are you going to have reduced payroll? You got to figure out what the company's going to look like the next 6 months. If you thought in January everything looked great and you were going to have a $5 million company in sales or 10 million or whatever it might be, going forward, starting in June to December, you may have a company that only has 3 million or 4 million of revenue. So if you've got 3 or 4 million of revenue, what's your budget going to look like? What can you afford in the way of buying inventory? What can you afford in the way of payroll? What's your gross margin going to look like? You've got to create a brand new company and a brand new budget, because for those of you that have been shut down, 2020 is not going to be the year that you thought it was going to be. Number 5, eliminate any non-essential expenses. Cut back on some of the stuff that you've been doing the last couple years. Control your inventory. Instead of ordering a lot of inventory, maybe order just enough and then have the truck deliver everything else just in time. Control what you're buying in inventory. Inventory is an important item, and we'll cover more of that later. So those of you that do projects, like installation of carpet in homes, or if you're doing construction projects, think about having progress payments. So instead of getting a big check now and then another big check in 2 or 3 months, maybe have progress payments. That's another way to get cash in the door. Get more cash coming in, because you're going to need it the next 6 months. Okay, cash. Talk to your lenders. Banks now are a little bit, especially the smaller banks, they're a little bit more lenient. They're willing to work with you because they know you're coming out of a bad time. keep your interest paid up, but you might talk to the bank. I don't know what they're going to say, but it's worth asking. If you've got a loan that's at 6% and you've got 8 years to go, talk to the banker about maybe reducing it to 5 or 4% and stretching it from 8 years back out to 15 years. That'll reduce your monthly payments and allow you to keep more cash. So talk to your lenders, okay? And then talk to your CPA about recalculating your taxes, because you and your accountant may have talked in the fourth quarter of 2019 about what the quarterly taxes were going to look like. Get those recalculated, because the next 3 quarters, it'll probably be a lower number. So save cash, accumulate cash. You know, sometimes we say hoard cash, but a lot of people here don't like me to say that. But what's the next one, John? Mike's going to talk about IRAs. They loosened up the rules on IRAs. Mike Kelster is going to cover that. Yeah.
That's exactly right. Thanks, Gary. So one of the things that a lot of people have is we're short on cash in the business, but I have these investments tied up in an IRA or a simple or a 401k plan. And previously, the only way that I could access those funds was via a loan, and that loan was capped at $50,000. They've now increased that loan to $100,000, but still with a loan, you have to start making repayments on it right away out of pay. So it doesn't really solve a cash flow problem that Gary has been highlighting thus far. So what we're talking to people about, not, normally as a last resort, but if you need to keep the doors open and need to get some cash, you can now get up to $100,000 out of that IRA, out of that 401k plan as a distribution. And normally there's a lot of penalties and taxes that go with this, but they've changed the rules. Number one, there's no 10% penalty if you're under age 59 and a half. That has been completely waived. Number two is that normally there's a mandatory 20% tax withholding, and they've waived that as well. So if you wanted to get $100,000 out, you get all $100,000. They don't hold back $20,000 for taxes right off the bat. Then, as Gary pointed out, if you're having a tough year, your taxable income isn't going to be as high. So taking a distribution, while it is taxable, hopefully you're in a lower tax bracket this year, and whatever tax you owe on the distribution can be spread out over 3 years, 2020, 2021, 2022. So again, from the cash flow perspective, it keeps more money in your pocket right now. And then the final benefit that is brand new, never been done before, is you are allowed to repay this distribution for up to 3 years. So we're still getting some clarification exactly how that's going to work itself out. But if I can access those dollars, not have to pay the penalty, stretch the tax payments over 3 years, and then when my business is back up and running and we're making money 2021, 2022, I can repay that. This is really now a viable option for a lot of business owners out there. So definitely something worth considering. If you have specifics, as John mentioned, let us know. We can help you walk through.
And I would say be very careful too. If you have like a 401k or simple plan that has all you and the employees benefit of, say, like $400,000 or $500,000, you can't borrow against your employees' contributions into their own plan or the part that's for them. This is you're putting your money that you put into that plan at risk by taking it back out again and then paying it back.
Yeah, and as all of us sitting here would say, this is not our first choice. I would prefer that you not touch this retirement money unless it's a last resort, but it is available. And Mike told you how they loosened up the benefits to make it available to you, but it's not my first choice. I would rather you talk to your banker. What's next, John? I might mention that the slide that Mike talked about on IRAs and the next 2 or 3 slides are for the business owner. The first part was about what companies can do, and then now let's talk about things that the business owner can do to use the money to help himself or to help his business. We talked about the IRA. This is for all of you business owners that are still getting up and going to work every day. If you're over 72, all you old guys,
Including Gary.
for all you guys over 72, in the past, like last year, you had to take what's called a required minimum distribution, an RMD. What they've done this year with the CARES Act is that they said you don't have to take the payment. So whatever, if you had to take $10,000, $20,000, $30,000, whatever it was, you don't have to take it. You can leave it in there and let it grow. So if you don't need the cash flow, leave it in there. Tell whoever's handling your IRAs, tell them that you don't want the payment. You just want to leave it in and let it grow. However, I did talk to one client yesterday who was 92 years old, and she said, no, I want the money now because I may not be here next year. So, you know, we get all kinds of answers from different people, but that was yesterday. But you can leave that money in and let it grow for a year or so and take some out next year. John, what's next? Oh, and I was talking about returning the money at the bottom paragraph there. You can return apparently 1 month. If you've already taken March or April, you can return 1 month. If you're getting your benefits monthly, tell whoever's handling your IRA, tell them to turn off the future payments if you don't want them. So if you can, leave it in. If you need the money, go ahead and take the RMD. What's next, John? Okay, here's another idea for business owners. If those of you that normally give a lot of money every year to your church, your hospitals, your colleges, whoever you're giving money to, different charities in your community, they loosened up the rules and you can make a great big contribution this year and wipe out all your taxes. So instead of writing a check to Uncle Sam, you can write a check to your favorite charities. And you can get 100% benefit, whereas it used to be less in the past. And I didn't put it on there, but one thing you can do if you want to make a big payment this year is that think of how much you want to put away for 2020 and 2021. Take the next 2 years. Let's say I'm going to pick a number. Let's say it's 50,000 a year this year and 50,000 next year. Get a hold of either Vanguard or Schwab or Fidelity or one of the companies that have a charitable organization, donor advised fund. Yeah, they have donor advised funds, DAF, donor advised funds. Put that 100,000 in the donor advised fund this year. Take $100,000 tax deduction, and you've already socked away the money for 2020 and 2021, but you've lumped it into 1 year rather than spreading it out over 2 years. So get the tax benefit this year, don't wait till next year. So this is an idea for business owners that do a lot of charitable giving. What's next, John? Another small idea for grandparents and parents that are paying for student loans for kids to go to college. They said in this CARES Act that you can put off making those monthly payments until October 1st. So between now and September 30th, you don't have to make those payments. It's another way to accumulate small amounts of cash. We're just trying to come up with more cash. What's next, John? This is one of the last slides. And we're just trying to sum things up here. I'm concerned about the businesses that have been shut down for a month or so. And I know that some of the stores, they've been carrying stuff out to the sidewalk and putting it in the back of somebody's trunk, or they haven't let anybody in the showroom. And I know some people have let one person in the showroom at a time, not 3 or 4 or 5. So sales are down close to zero. So you've got to figure out how we're going to get through the next 6 months and the next 12 to 18 months. So take a look at that budget. Take a look at what you started with in January and what you've got to work with now. So as I said before, talk to your bankers about negotiating loans, renegotiate if you can. talk to your building landlords. If you're in a shopping center, you have a retail space, maybe you can put off paying the rent for 2 or 3 months. Maybe they'll add it to the back end of your lease. Take a hard look at your payroll. For a lot of you, the payroll is the most expensive item. Okay, so if your sales are lower the next 6 months than what you thought they were going to be, how much payroll do you need to get through the next 6 to 12 months? Sell old inventory. I can't tell you how many we do. I don't know, about 130 to 150 valuations each year. And we're always talking to clients that we're doing valuations on what's their inventory, how much of it's real. And if you've got old inventory that's been laying around for 2 or 3 years, get rid of it. Have a sale. You know, have it 50% off, 60% off, whatever. I was talking to a reporter not too long ago, and I said, I'd rather accumulate cash than accumulate dust. You know, so get rid of that old inventory and get the cash in your pocket rather than leaving the inventory laying in the back of the warehouse somewhere. Work on your accounts receivable. Try and get that money in. Keep your gross margins up as high as you can. Don't reduce gross margins just to try and make a sale, because over the next 3 or 4 months, you're going to have a hard time getting those margins back up. And that's going to be real important to get through the next 6 months, because higher gross margins helps with accumulating cash. Be aggressive on your depreciation, write-offs. Remember, I talked about net operating losses. Get all the write-offs you can get this year. Talk to your accountant about if you do have a loss, how much tax can I go back and get from 2018 or 19? And then the last item there is to spend a couple hours every week. Now's the time to do it, to get ready for the next 6 to 12 months. Spend 2 hours working on your company rather than in your company. Because if you're stuck at home, spend time working on that budget and the old inventory and the payroll, and call your banker. Do work on the company for the next week or two. Get ready for the next 6 months. What's next, John? This is the tail end, and those of you that already know us, you probably have been to castle3.com up at the top on the right-hand side. In Castle 3, which is our website, you can go to articles at the top up there. Also, there's videos right next to it, either videos or articles. And if you go to for business owners, and then down below are dozens and dozens and dozens of articles about everything you can think of. As you can see, the first one there talks about the CARES Act. You know, the second one talks about succession and exit planning, retirement, buy-sell agreements, all kinds of business ideas we've accumulated on that website the last few years. You can print them off and read them, print them off and give them to your attorney, print them off and give them to your accountant. But there's a lot of stuff there you can read if you want more information. Just go get it. John, I think the next slide's the last one. If you have a question, get a hold of Doug O'Brien at NCBA CLUSA. Contact his email, or from now you can contact either Gary at Castle 3 or Michael or Catherine or John at castle3.com, and we'll be glad to answer any questions, because we want you to get through the next 6 to 12 months. We want to help you accumulate cash, help you keep your businesses going. So whatever we can do to help, let me know. I think that's it, John.
Gary, that's and Mike and John and Catherine, thanks so much for all of that information. Some really, really valuable information to help businesses and cooperatives weather this storm and survive, through this economic challenging time. We got some questions lined up. I want to remind everybody that if you have a question, please just go ahead and put the question in the chat box, and then I'll be able to see it, and I'll be able to ask our team of experts here. And the first question I have is, I think it's clarification on the distribution. The question states, if you repay the distribution in 3 years, why would it be taxable income when you take it out? And I think the person they think they might not have heard that correctly, but they just want to, if you could clarify for that question on the distribution in 3 years and its taxable status.
Right, Doug. Yes, thanks for the question. Yeah, and again, part of this is a brand new provision that's never been available on a distribution before. So we're not exactly sure how that's going to work. We do know for a fact, if I take a distribution this year, I calculate the tax that's owed on that, and then I can spread that tax out over the next 3 years. So let's say I do that, and let's say that I owe $5,000 in year one. If I then repay that in year two, if I repay all of it, do I not only not get taxed and then get a tax credit for the tax I've already paid? That would seem logical. So then it would effectively be a no tax situation, but we don't know exactly how that's going to work out at this point. So great question. I'm sorry I can't give you a definitive answer, but we do know what we can do, and the repayment part of it, we'll get some more clarification. We should have a good answer on that within either weeks to months down the road, but I can't give you a good answer on that right now. Sorry.
Okay. All right. Fair enough. Okay. Thank you. I got another question here. You mentioned how many valuations that Castle Wealth does in a year. Is a valuation question. How do you feel that this pandemic downturn will impact the value of of different businesses?
Well, we spent a lot of time in the last week or so talking about that. The last couple of weeks, we even had a big discussion on our Zoom conference yesterday. John, why don't you give her your quick answer?
Yeah, I think what the prudent thing to do from a valuation perspective is we can't completely disregard 2020, but we can sure as heck mitigate it and have very little impact. And so the sword kind of swings both ways. If you're a company that got to stay open during this period, I don't want to say it's been business as usual, but you may be doing as well, if not better, than the year before. Plus, maybe you applied for the PPP, and there's another $200,000, $100,000 of income that doesn't even have to be counted as taxable income when you receive it. Well, gosh, from a valuation perspective, shouldn't that be worth a lot more now than and we would say probably not. We've got to look at valuations from a consistency standpoint. So if it's you're shut down, not doing well because of COVID, but then things kind of pop back up again, which we all hope and aspire for in the future. My thinking is that 2020 maybe is kind of a wash, and we just don't take that into consideration. But I think it's going to be on a very case-by-case basis. Again, you got to think about what is that valuation doing? Are we trying to figure out a selling price for the company? Are we trying to transfer shares from a father to a son of a small interest in the business, or a daughter, or from two unrelated parties for that matter? So there's no good answer, no one specific thing that I could point to, but I would say give yourself a break. If things are not going well, don't think that means that your company has become absolutely worthless. But on the same token, if you're doing incredibly well, don't think that a potential buyer of your company, or the IRS for that matter, is going to all of a sudden say, oh, well, your company's worth twice as much as it used to be.
As John said, it's unique to the company's situation. If they're doing great, the business, they're doing great because of this disaster, and people are running to the hardware store, or they're running to the grocery store, and they're buying lots of stuff. But don't let this stop whatever your succession plan might be. if you're selling to your son or daughter, if you're selling to key employees, you know, if you're selling to somebody else, keep working at it. And those of us that do valuations, you know, every day, we know how to kind of mitigate, which is, John, that's a good word, John, how to mitigate the ups and downs of this disaster and the country being shut down. So don't let it affect the value of your business. We can even it out. People that are certified to do valuations have ways of protecting you and mitigating all of this. So
yeah, and keep in mind, I mean, everybody that we're speaking to right now, I could say with a lot of certainty, you're a privately held business. Don't let the publicly held business issues freak you out or look to those, because obviously, unfortunately, for their sake, they have to go with whatever the market is willing to do for them. And if there's a perception that they're not worth very much, like the airline industries, they're worth what that stock price is right now. You're not in the same position as that. Closely held businesses are, they're not immune to it, but it's just simply a different breed of cat. You've got to be able to look at that, I think, realistically and pragmatically and reasonably.
what's your next question, Doug?
Yeah, well, thanks for that, for those comments. I got one around the human resource, the people who work for the co-ops and the companies. And of course, you know, that's perhaps one of the greatest economic tragedies we're seeing right now is that terrific downturn in employment numbers. But as you pointed out, you know, that for many businesses, the HR costs are primary and can be, you know, the lion's share of the business. Now I think the question is around how to make some of these decisions around HR when you've got the PPP, you've got the EIDL, that generally have the purpose of trying to keep people on the payroll. So how should co-ops and small business owners kind of, you know, weave that through as they're also trying to, you know, treat their employers the best they can given the conditions that the economy is in?
Yeah, that's kind of the $64 million question.
Well, you've got, let's assume that you've already got your PPP loan. You got it 2 or 3 weeks ago, or maybe 3 or 4 weeks ago, or maybe you got it last week. So what you've promised is that when you filled out that form, you wrote down how many employees you got. And if you got 25 or 50 or 10, then you want to keep those employees employed, and you got money to meet the payroll for the next 8 weeks, the next 2 months, which tries to get you from May through June, April, May, June. So you've got to keep paying. Now, if you didn't get a loan, then that's a completely different story. But you want to, if you've got the loan, you have to keep them on the payroll. And what I talked about earlier was the government's helping you get through March, April, May, and into June. But then after June, you're on your own. So when I talked earlier, like if you had a $5 million company and now it's going to be a $3 million company, you know, for a lot of the industries, not all of them, but a lot of the industries that we work at, you know, if your gross margins are 38 to 40%, your payroll should be about 19 to 20 to 21%. You know, so if your sales are 3 million and your payroll is 28% or 26%, it's way too high. You got too many people. So your gross margin and your payroll percentage is going to dictate how many people you can afford to have. You know, you may try and use your own cash and keep more people on the payroll, but your company just won't make any money. You know, but maybe having a big loss, you can use that to get taxes from the past. But the number of people that you have on the payroll is normally dictated by what your sales are and your gross margin. So
yeah, and so this gets really specific to your business too. But if you, I mean, I'm just thinking of like one issue that we did not cover in this was having your employees file for unemployment. You know, and I know we talk about these unemployment figures in the media, and they talk about this just devastation to our economy. And it's not a good thing, but I'm really glad that we have an infrastructure in place where those people can at least apply for something. And thank goodness that we do have that in place. Otherwise, we would have some significant economic problems. But my point is, maybe when the reality of COVID was kicking in, and your reaction to that was, we're not doing any business, and you had to let people go or furlough them or keep them on payroll with zero pay, that they had the ability to file for unemployment for that period of time. Then as time was going on, and maybe you were finding that, oh, there's some programs here that I have available to me that, well, I do have some cash, I would like to pay employees, I've got tax credits that I could take advantage of, and then I've got the PPP loan. Those have to be different monies. And so the reality, that the answer to that question, and actually folks at the AICPA have been talking about, is it really is a sit-down conversation with your accountant to go through and look at how can you kind of maximize things both for your employees and for yourself, balancing all of these programs out. So I'm not answering the question, but I'm saying that your accountant probably has the best formulas to say the combination of letting people go on unemployment for a period, paying them and using funds that have been provided to you, keeping your own doors open and keeping that keeping people paid so that they're not leaving the organization, so that when things start back up again, you have a staff to which you can count on and go on your merry way. So I'm sorry that isn't super specific, but that's what we're hearing, and that's what I'm seeing.
I think that's really helpful, and just to understand all the moving pieces when businesses and co-ops are thinking about what's really their most critical resource, and that's their people. So I think that's really helpful. I think we got time for one more. Before I ask this last question, I will just mention that if you do have any other questions, go ahead and put them in the chat box. We'll get them to Castle Wealth. If it's a question that we at NCBA CLUSA can handle, we'll do that. I'm going to reiterate what Gary mentioned before. The contact information for the Castle Wealth folks is right there before you. We're going to share this webinar within 3 business days. We'll put it back out to the attendees here today, and we'll post it on NCBA CLUSA's COVID-19 website, and we'll continue. I'm sure, just as Castle Wealth, continuing to try and help small businesses here at NCBA CLUSA, helping co-ops weather this economic storm that we find ourselves in. So one more question, and this one is a little bit more specific. If a business, if a co-op receives a PPP loan and it is forgiven, can the business still use the payroll, rent, and utilities as an expense on the tax return?
Yes.
I'm assuming, I'm assuming yes. Okay, go ahead and you just clarify that.
No, I mean, it's that simple. The IRS or Congress or whoever you wanted could have made this really a crappy situation where they counted the loan as income, but they didn't. So it's free money. And then when you pay the expense, whatever it is, as long as it would otherwise be a deductible expense for business purposes, you can deduct it. So it's a twofer. So that's why we're very much encouraging businesses to apply for these loans if they can get them. We don't want to overwhelm the system, and we do want this to go to people that really need it. But that's an excellent question, and it's something that actually surprised a lot of us, was that you could take that deduction.
Yeah, really important point. Maybe a good last point. So much valuable information from the team there at Castle Wealth. Thank you, Kate LaTour with NCBA, for sharing your insights on the policy realm. Things, if there's anything about this COVID experience, it's how it's been such an evolving situation. And I can speak for NCBA CLUSA and say that, wherever this path leads, we are going to be standing next to the cooperative community and doing everything we can to help and support. Please do feel free to reach out to Casa Wealth, the contact information right there in front of you. Reach out to NCBA CLUSA. Our contact information is on our website. Check out the COVID-19 resources. And please, everybody, stay safe. And thank you again for participating in today's webinar. Goodbye.
Shut us up.
You want to leave? Yes.